Taipei, November 7 expects lower shipments of premium iPhone 14 models than previously anticipated following a significant production cut at a virus-blighted plant in China, dampening its sales outlook for the busy year-end holiday season. Demand for high-end smartphones, which are assembled at Foxconn's Zhengzhou plant, has helped Apple remain a bright spot in a tech sector battered by cuts in consumer spending amid rising inflation and interest rates. However, the Cupertino, California-based provider has fallen victim to China's zero COVID-19 policy, which has caused global companies like Canada Goose Holdings Inc. to close local stores and slash forecasts. The facility is currently operating at significantly reduced capacity, Apple said Sunday, without specifying the extent of the reduction. We continue to see strong demand for iPhone 14 Pro and iPhone 14 Pro Max models. However, we now expect lower iPhone 14 Pro and iPhone 14 Pro Max shipments than we previously anticipated, read a statement. The Central China factory, which employs about 200,000 people, was rocked by dissatisfaction with strict measures to contain the spread of COVID-19, with many workers fleeing the site. Market researcher TrendForce last week lowered its October-December iPhone shipment forecast by 2 million to 3 million units from 80 million due to the factory's troubles, adding that its research showed capacity utilization rates of about 70%. Apple, which began selling its iPhone 14 lineup in September, said customers should expect longer waits. Anything that affects Apple's production obviously affects their share price, said Quincy Crosby, chief global strategist at LPL Financial in Charlotte, North Carolina. But this is part of a much deeper story, the uncertainty surrounding the future of the Chinese economy. These headlines are part of the ongoing saga as to whether there is any truth to the consistent rumors that authorities are discussing whether some of the measures will be lifted in the first quarter. China on Monday reported its highest number of new COVID-19 infections in 6 months, with the disruption to the world's second biggest economy spreading nationwide since October. Over the weekend, health officials said they were sticking to strict coronavirus curbs, disappointing investors hoping for relaxation. Meanwhile, Apple expects to produce at least 3 million fewer iPhone 14 phones than planned this year as demand for lower-end models is weak, Bloomberg News reported Monday, citing people familiar with the plan. Given that Apple reported only 2 weeks ago with positive guidance, we think this points to the potential for a longer and more severe lockdown, said Credit Suisse analysts, expecting iPhone sales to be delayed to later quarters than lost. They estimated that Apple's revenue will rise 3% in the current quarter, with iPhone sales rising 2% to $73 billion. Foxconn reduces outlook. Taiwan's Foxconn is the world's largest contract electronics manufacturer and Apple's biggest iPhone maker, accounting for 70% of shipments globally. It has iPhone manufacturing bases in India and southern China, but the largest is in the city of Zhengzhou in East China's Hunan province. Local officials recently commented on cases of COVID-19 at the plant. Foxconn has declined to disclose the number of infections or comment on the condition of those infected. On Monday, it said it was working to resume full production in Zhengzhou as soon as possible. A person familiar with the matter told Reuters that Foxconn's target is in the second half of November. At the request of the local government, Foxconn said it would take measures to contain the spread of COVID-19, including restricting employees' movement between their dormitories and the factory premises. The manufacturer has also begun a recruitment drive, offering workers who left the plant during October 10 to November 5 a one-off bonus of 500 yuan if they returned. It was also advertised with salaries of 30 yuan an hour, which is higher than the base salaries of 17 to 23 yuan some workers were told Reuters. The Zhengzhou Airport Economy Zone, which houses the iPhone factory, entered a 7-day lockdown on Wednesday with measures included barring residents from going out and only allowing access to approved vehicles. Foxconn told the provincial government has made it clear that it will, as always, fully support Foxconn. Foxconn is now working with the government in concerted effort to stamp out the pandemic and resume production to its full capacity as quickly as possible. After previously cautious optimism in its fourth-quarter earnings guidance, Foxconn on Monday said it will revise down expressed his outlook on the events in Zhengzhou. The fourth quarter is traditionally a hot season for Taiwanese tech companies as they scramble to supply smartphones, tablets, and other electronics for year-end holiday shopping in Western markets. Foxconn releases its third-quarter earnings results on November 10. The company's share price, formerly Han High Precision Industry Co. Ltd., fell 0.5% in Monday trade, while the benchmark index rose 1.5%.